Hello, and welcome to our next NAP. I am Irina Ryshkova, and I'm your nonprofit auditor. NAP stands for Nonprofit Auditor Points. I decided to record these NAPs to help nonprofit community to understand some complexities of accounting and auditing. And hopefully, nonprofits, their management and board will find these NAPs useful. Full disclosure, these NAPs are not authoritative. They're simple me sharing my experience with nonprofit organizations and communities. If your nonprofit have any specific questions, please consult either your auditor or you can contact me or look for other resources. Today, I want to talk about prepaids. Prepaid is a very simple concept. However, sometimes it's misunderstood because it's not happens often in small nonprofit organizations. What are prepaids? On accrual method of accounting, under GAAP, General Accepted Accounting Principles, expenses needs to be recorded when they incurred, not when they paid. For example, today is January 1st, 2024. And if nonprofit pays insurance for 3 years, let's just assume for next 3 years, let's just say it's $3,000. Under cash method, that would be an expense. However, all our nonprofits use accrual method of accounting, which is General Accepted Accounting Principles, should be accrual method. And if nonprofit pays $3,000 on January 1st, 2024 for 3 years, it's not an expense. It's prepaid. It's payment for the future expenses, which nonprofit will benefit for the next 3 years. Therefore, this $3,000 needs to be recorded as a prepaid expense as an asset. Once again, under accrual method of accounting, expenses have nothing to do with the timing of the paying them. They need to be recorded when expense incurred. Insurance will provide coverage for the next 3 years. So as nonprofit going to be using that insurance, nonprofit should expense it. But for now, it's a prepayment for future insurance costs. Therefore, when nonprofit records prepayment, nonprofit should record decrease in cash and increase in prepayment. However, very often, especially if nonprofit organization is using QuickBooks, they record prepayment using bill function. They use bill and they record prepaid. Very often, if nonprofit receives invoice for insurance at the end of the year, in order to make sure that this invoice is recorded, nonprofit goes to QuickBooks and record that invoice as bill. Now, let's just think that nonprofit year end December 31st. 2024. And at the end of the year in December, nonprofit received bill for next year insurance, 2025. So nonprofit records it as a bill and prepayment. Some nonprofits saying from internal standpoint, we want to make sure that we do record this bill because we received it. However, if you do so, what happens? You record it as a liability because you record invoice and you record prepaid. What is definition of liability? Liability is unpaid expense. Expense that already incurred. Is this insurance already incurred? No, so it cannot be liability. Now, by recording this invoice, nonprofit also increased prepaid. What is definition of prepaid? Prepaid, it's something that nonprofit paid but will be expense in future. Did nonprofit already paid it? No, they record as a bill, so it's not in prepaid either. So the question is how this invoice should be recorded. And the answer is this invoice should not be recorded at the end of the year because it's not a prepaid, because it has not been paid, and it's not a liability at the end of the year because this is for future expenses. Therefore, nonprofits have to be careful to record something as a liability if it was received at the end of the year, but it's for future expenses. Nonprofits need to make sure every time an invoice received, and if it's paid, but it's for future expenses, needs to be recorded as a prepaid. And typical prepaids are insurance, rent, because typically rent is prepaid at least 1 month ahead, and it could be some other prepaids. Prepaids could be material. Therefore, nonprofits have to maintain a schedule of their prepaids and make sure that review prepaid account often to make sure that prepaids are not misstated. By recording prepaids as a liability and not paying them, nonprofit overstating their prepaid account and liability. It's just bulking up the balance sheet without real purpose. It's incorrect accounting treatment. To summarize, prepaids are typically very small and very often not material accounts for nonprofits. However, they could be material and could be very important. Therefore, very critical for nonprofits to understand the accounting policies and treatment of prepaids and review the prepaid schedule periodically and review the expenses periodically to make sure that expenses record in a proper period. Because under GAAP, expenses should be recorded when they have been incurred. So if the expense is paid before it had been incurred, it needs to be recorded as an asset and needs to be amortized, meaning removed from prepaid and moved to expense as it has been used. So this is prepaids. Thank you so much for being here with me. That was NAP on prepaids. Looking forward to see you next time.